Welcome to Charts Today. My name's David Linton, and today's edition for Friday the 12th of January comes to you from London. And we start by looking at the dollar. Dollar sinking lower here. We're seeing this real sell-off again this morning, and that's pointing to this low that we saw in September coming under pressure. We've got a little bit further to go there. Of course, support isn't broken until we actually break through it, but it does look like this level is going to come under pressure. So just interesting, and we're seeing downside targets here of between 0.6 and 1.2% on the short-term chart. Of course, support is still holding on the long-term chart, and we haven't yet activated this downside target for the dollar. Of course, this translates to euro strength. News this morning of the German parties managing to put a deal together is pushing the euro above 120. We're just nudging above 120. Has been a strong resistance point for the euro for a while, and we have got targets to 121, 124. So it does look like the euro is on the up, and it's activated this upside target of 158. So that's 30% upside from here. So really significant if we can hold this level. And of course, in the long-term chart, we need to see 120 held for a few weeks before we can say that it's convincingly broken. Japanese yen is showing dollar weakness here, so yen strength. Although we're still in bullish mode on the long term and the medium term chart, although that's starting to change. So this dollar weakness really filtering around. Sterling up on that weaker dollar, but if you look at sterling against the euro, we are sinking lower, just showing that euro strength. Taking a look at sterling against the Swiss franc, you see we're still lower here, bearish in the short term, and the long term, and on the Australian dollar, we're also just recovering strongly in sterling, Australian dollar sentiment in line with the US generally. Taking a look at Bitcoin, we see here that this candle this week is down. This is the double top look of very much a Dow pattern we talked about yesterday. 13,000 is the key level. We'd nudged that last night and early overnight. We've got downside targets now to 7,500 on Bitcoin. So really dramatic falls could be on the cards there. S&P 500 continues to look pretty strong, as does the Nasdaq, and the Dow also looking strong. And the Russell 2000, another good session yesterday, looking stronger and clearer upside targets. So the broad-based market looking pretty good. The S&P future is up this morning, as is the Nasdaq E-mini. So the markets do look a little bit stronger, up about 0.25% there. FTSE 100 is up very slightly this morning, and the FTSE 250 is making a stronger recovery. Here we're up over 0.5%, so it does look a bit better. And the DAX is just really struggling a little bit. It's up this morning, but very slightly, but it hasn't had a great few days. But overall, we've got this resistance we saw back in November to crack on the DAX. The Nikkei down slightly on the stronger yen. Hang Seng is still powering ahead. It has an amazing start to the new year. We've really powered ahead very rapidly there. And the Shanghai Composite also looking strong. So the worry over Chinese stocks that we were seeing in the last couple of years are really receding very strongly on the charts. The Indian market still looking strong, and the Australian market is also still holding its bull trend just on the short-term chart. Oil has been in the news quite a lot, making new three-year highs. We were momentarily above $70 yesterday, but couldn't quite hold it on Brent. But at this time of year, crude oil does tend to perform very strongly, so we shouldn't be surprised to see $70 smashed. And we got targets here of 71.30 and 71.80. 72 has been a long-term target since 2016 when we were at $50, and we're seeing here we've got good upside targets. WTI is also looking strong now that we're now that we're just again nudging these mid-60s. Not as clear cut on the target side as Brent, but does look very strong, of course. US natgas really jumped yesterday, back above $3, so looking better. I'm seeing storage numbers are out and probably a lot of gas used up in the cold snap, but interestingly, it's still a very hard chart to read. Copper looking still quite strong. Heating oil, very similar chart to oil. Then we go straight to gold. Gold nudging 13.30 this morning. We're at 13.30.74, so that weaker dollar really pushing gold forward. We've got upside targets now, downside targets on the short-term chart negated. We've got upside targets of 13.59, 13.49, and we're seeing here that we're starting to nudge for activating this target, and move below above 13.60 for gold would be very positive. Silver hasn't looked as good, but we've crossed the corner here as well, and starting to look a little bit better, certainly in the short term, and the medium term doesn't have too much to do to get bullish again. It's these downside targets on the long-term chart which are key. US Treasury yield sitting at 2.55%. Again, we're really just nudging to get above that 260 level, but there's no question here. Yields looking bullish. Market pricing in rate rises. Apple, a stronger performance yesterday, so looking a little bit better above the chart. Google still looking pretty good. Amazon stronger, and Facebook's just holding ground in the high 180s. Microsoft continuing to look pretty good on the long-term charts. That's it for today. Have a great weekend. Until Monday, happy charting. See you then.